So here's a crazy question for you. Can a professional dancer, someone with zero Wall Street connections, take just a few $1,000s and turn it into over 2 million? It sounds impossible, right? But we're about to dive into the story of Nicholas Darvas, because his journey isn't just about the money. It's about a relentless, almost obsessive search for a system to beat the market, and maybe more importantly, to beat his own human emotions. And this quote, this is pretty much the core philosophy he landed on. But let me tell you, this was a lesson he learned the hard way, a lesson written in thousands and thousands of dollars of losses. See, for him, it boiled down to something super simple. All that mattered was a stock's momentum. Is it going up or is it going down? That's it. But to really get how he reached this cold, hard conclusion, we've got to go back to the very beginning, to a moment of pure dumb luck. Yeah, his journey didn't start with some brilliant insight or a secret formula. Nope, it all started by complete accident, thanks to a pretty unusual offer from a nightclub owner. So, picture this. As payment for a dancing gig, he gets offered 6,000 shares of some Canadian mining stock called Brillant. It was worth about $3,000 at the time. He actually just ended up buying the stock, more as a nice gesture than anything. Then, 2 months go by. He kind of forgets about it, idly checks the price, and discovers his 50-cent shares are now trading at $1.90. He sold right away, pocketing a profit of almost $8,000. And just like that, he was completely hooked. Okay, so after that first win, he thought he'd found a magic money machine. And his first method? Well, it was simple. He'd just ask rich people, head waiters, anyone who seemed successful, for hot tips. I mean, he was buying stocks with names he couldn't even pronounce, all based on what some guy at a nightclub said. And as you can probably guess, he quickly found out this was a perfect recipe for losing a ton of money. Any small win he had got totally wiped out by much bigger losses. All right, so the whole gambling on hot tips phase, yeah, that was a total bust. So Darvas decides he needs to get serious. No more being an amateur. He was going to become a fundamentalist, a scientific investor. And, well, this decision, it would lead to his first major crisis. And he went all in. I mean, he buried himself in books, financial reports, learning the entire language of Wall Street, earnings, dividends, capitalization, the whole deal. He spent months just poring over company statements, absolutely convinced that if he just did enough research, he could find that one perfect, can't-miss stock. Okay, and here's where all that hard work led. After all that research, he zeroes in on the steel industry as the strongest sector, and he makes this comparison table. Now, if you look at it based on every logical metric you can think of, the rating, the dividend, the price-to-earnings ratio, one stock just jumps off the page as the absolute best, Jones & Laughlin. I mean, it looked like a scientific certainty, a total slam dunk. So, convinced he'd finally found the golden key, Darvas went for it. He mortgaged his property, he took out loans, he put everything he had into Jones & Laughlin. And the very moment he bought it, the stock started to plummet. Just tank. He was paralyzed. He just held on, watching in horror as his perfect investment completely disintegrated. The loss was just crushing. Not just the money, but emotionally. It basically proved that all his hard work, all that research, it meant absolutely nothing. He was desperate. I mean, truly at rock bottom. But in this last-ditch effort to make some money back, he bought a stock called Texas Gulf Producing. And he bought it for one simple reason. It was going up. That's it. And guess what? It worked. This one single, frantic trade made him question everything and started him down the path to a theory that was completely his own. So this was the question that just haunted him. How can you possibly know when to buy? Gambling had failed him, deep fundamental analysis had failed him, and he had this huge realization. The problem wasn't just what to buy, it was when to buy. His focus shifted completely, away from a company's balance sheet and onto its actual behavior in the market. And his solution was a concept he called the box theory. It's actually pretty clever. He noticed that stocks don't just move up and down randomly. They tend to fluctuate within a certain price range, or a box, as he called it. So a stock might bounce between, say, $45 and $50 for weeks on end. The key, he decided, was to just wait. Wait for the stock to prove its own strength by breaking out of that box and into a new, higher one. That was the signal to buy. So he boiled this whole new philosophy down into 4 pillars. It's really straightforward. 1, find the right stocks, the ones already showing upward momentum. 2, get the timing right, buy on the breakout into a new box. And then 3 and 4, which are the most critical, cut your losses small and let your big profits run. And this was his ultimate weapon, the stop-loss order. For every single stock he bought, he would immediately place an automatic order to sell if it dropped to a certain price. This was a game changer because it took the decision completely out of his hands. It removed his ego, his hope, his fear, all of it right out of the equation. If he was wrong, no big deal. The market would just take him out with a small, manageable loss. So now, armed with his new box theory and his trusty stop-loss system, Darvas heads off on a 2-year world dancing tour. This meant he'd have to trade from thousands of miles away, using nothing but telegrams. And this distance, he was about to find out, was going to be both his greatest challenge and his greatest advantage. Think about it. Trading from places like Hong Kong and Paris, Darvas was totally isolated. No one was calling him from the brokerage. There was no financial news, no hot rumors, just the cold, hard numbers in his daily telegram. It forced him to be completely detached and rely only on his system. And you know what? It worked beautifully. But then he returned to New York, and he walked straight back into the lion's den. Suddenly, he's back in a broker's boardroom, surrounded by ticker tapes and nonstop chatter. And his discipline just crumbled. He threw his system out the window, started listening to tips again, and got sucked right into the emotional frenzy of the trading floor. He started day trading like a maniac, buying high, selling low, and in just a few weeks, he lost a staggering $100,000. And that is when he had his final, and maybe most important realization. It wasn't the market that beat him, it was the noise. The tips, the gossip, the opinions, all that stuff pouring into his ears completely destroyed his cold clinical system. As he put it, my ears were my enemy. He finally understood that his greatest strength as an investor had been his isolation. You know, that painful lesson? That was the last piece of the puzzle. He knew exactly what he had to do now. He had to recreate the isolation of his world tour, even though he was living just a few blocks from Wall Street. So he built what he called an iron fence around himself. He told his brokers, do not call me, ever. He had them send his quotes by telegram, but only after the market closed for the day. He would literally tear the financial news section out of the newspaper and throw it in the trash without even looking at it. Basically, he would do his work while Wall Street was sleeping, keeping himself completely insulated from all that emotional chaos. And now, with his system perfected and his discipline locked in tight, the results were just explosive. He spotted Lorillard as it broke out of its box and netted over 21 grand. He took that capital and got into a stock called E.L. Bruce, riding a massive short squeeze to a profit of almost $300,000. He then rolled those winnings into Thiokol Chemical, which made him over $860,000 on a single trade. Unbelievable! So, in just 18 months, by rigidly, almost robotically applying his unique system, using fundamentals justifying promising industries, and then relying completely on his box theory for timing, the dancer who started with a lucky tip had built a fortune of over $2.25 million. And in the end, Darvas's incredible story leaves us with a really powerful question to think about. He admitted it himself. His system was wrong about half the time. But his journey really suggests that maybe the true holy grail of investing isn't finding some flawless, perfect strategy. Maybe it's just having the iron-willed discipline to stick to your rules, cut your losses without hesitation, and most importantly, protect yourself from yourself.